गुड मॉर्निंग दोस्तों, मेरा नाम राहुल प्रजापति और आई वेलकम यू अगेन फॉर दिस वेबिनार। इस मास्टर क्लास में हम लोग आज तीसरे सेशन में जहाँ पे हम लोग वोलेटिलिटी के बारे में और स्टडी करेंगे। इससे पहले अभी तक हम लोगों ने दो सेशंस के अंदर वी हैव टॉक्ड अबाउट बेसिक वोलेटिलिटी कि वोलेटिलिटी का मतलब क्या होता है और वोलेटिलिटी के कितने टाइप्स होते हैं। और हमने ये भी देखा कि स्पेसिफिकली अगर हम देखें तो जितने भी आईवीज के कंपोनेंट होते हैं या आईवी का या वोलेटिलिटी का मार्केट पे क्या इफेक्ट होता है या फिर ऑप्शन प्राइस पे क्या इफेक्ट होता है, ये हमने सीखा था पहले सेशन में। ओके, सेकंड सेशन में हमने देखा था कि कौन कौन सी स्ट्रैटेजीज डिप्लॉय कर सकते हैं, आईवी के कैरेक्टरिस्टिक्स क्या होते हैं, ओके, और क्यों शॉर्ट वॉल लॉन्ग वॉल स्ट्रैटेजीज करनी चाहिए, राइट। ओके, तो वो हमने उसमें डिस्कशन किया था ना। आज का जो सेशन है वो सबसे इंपॉर्टेंट है कि इवेंट ट्रेडिंग के अंदर स्पेसिफिकली जब हम कोई स्ट्रैटेजी डिप्लॉय कर देते हैं या कोई स्पेसिफिक स्ट्रैटेजी है, जैसे हमने स्ट्रैंगल डिस्कशन किया था, आयरन बटरफ्लाई डिस्कशन किया था पिछले सेशन में। यहाँ पे हम लोग ये चीज देखने चाह रहे हैं कि अगर हमने स्ट्रैटेजी डिप्लॉय कर दिया है तो स्ट्रैटेजी डिप्लॉय करने के बाद हम लोग प्रॉफिटेबल भी हो सकते हैं और नॉन प्रॉफिटेबल भी हो सकते हैं, राइट। ओके, क्योंकि इवेंट पे जब हम ट्रेड कर रहे हैं तो इवेंट जब डिक्लेयर होता है तो उसके बाद देयर कैन बी अ वेरी बिग मूवमेंट ऑल्सो, तो योर स्ट्रैटेजी कैन गो फॉर अ टॉस। ओके, तो उस स्ट्रैटेजी को अगर हम प्रॉफिट में है तो क्या करना है, अगर हम लॉस में है तो क्या करना है, राइट। ओके, ये दोनों चीजें हमको समझनी है। ओके, सो सबसे पहली चीज मैं आपको कंसेप्ट समझाता हूं कि इवेंट ट्रेडिंग वाले दिन जो हमने देखा था कि अगर किसी भी स्टॉक का रिजल्ट होता है तो आईवी उससे पहले बिल्टअप होता है, ये मैंने आप लोग को बताया था, राइट। ओके, कि धीरे 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 आईवी बिल्टअप होता है और उसके बाद इवेंट वाले दिन वो क्रैश हो जाता है, इवेंट के जस्ट अगले दिन। ओके, तो ट्रेड कैसे लेना है उसके ऊपर वो पहले जानना पड़ेगा। ओके, तो पहले मैं आपको डेटा दिखाता हूं कि वो कैसे होता है। ओके, so first of all I'll go to at the application of quantsap. Okay, so quantsap is our exclusive partner. Okay, we have a collaboration, तो ये डेटा आप यहाँ पर भी देख सकते हो। ओके, बट इसमें आपको यू हैव टू टेक अ सब्सक्रिप्शन फॉर गोइंग सम स्पेसिफिक डेटा। ओके, कुछ डेटा फ्री है यहाँ पे, आप यूज कर सकते हो बिल्कुल। ओके, बट देर आर फ्यू स्पेसिफिक डेटा जिनके लिए हमको पेड सब्सक्रिप्शन लेना पड़ता है। ओके, सो आप क्या करेंगे, इम्प्लाइड मैं आपको दिखा देता हूँ डेटा। ओके, बस ओके, आईवी चार्ट के ऊपर जाएंगे हम लोग। ओके, किसी भी पर्टिकुलर स्टॉक का ले लेते हैं, जैसे फॉर एग्जांपल एक्सिस बैंक ओपन हो रखा है, तो लेट मी जस्ट गो अ फ्यू डेज बैक, 500 डेज। ओके, तो अब आप इस चार्ट को ध्यान से देखिए। ओके, जहां पर भी मैंने आपको ये बताया था कि आईवी की कैरेक्टरिस्टिक कैसी होती है, तो जो उसमें ग्रे लाइन आप देख रहे हो, राइट, दैट ग्रे लाइन इज अ आईवी डेटा। ओके, और आप देख रहे हो कि वो नीचे नीचे बहुत देर तक रह रहा है और एक स्पाइक आता है, देन ये गिर जाता है। तो आप देखोगे यहाँ पे हुआ, ये डॉट लगा है, यहाँ पे डॉट लगा है, यहाँ पे भी डॉट लगा है, यहाँ पे भी है, यहाँ पे भी है, और ये जहां जहां पे काले काले डॉट है ये इसका रिजल्ट डे होता है। ओके, these are the result dates. So can you see that this particular date also 24 July was a 24 was a result date for Axis Bank. So you see what I told yesterday in a previous session that key just before some day, okay, 10 days or 5 days somewhere before, okay, the IV started increasing. So from 5th July, see, the IV started going up from 25, it went up to almost 25th. Okay, 24th. So 24th को result था, so it peaked there. And now see what was the IV on that day, 75. Okay, and next day it crashed to 21 directly. So IV crashed almost by you can see 20 or almost 50 points. It's a big number, right? So what will be the effect of this particular the case? We need to comprehend that also. Okay, so we'll go to a option calculator. I'll show you, okay, how you go and understand this particular thing. Okay, option calculator. So option calculator is might be free, you can go and check. Okay, so we'll select the Axis Bank. Okay, now let's say my IV, so we'll take 1,000 rupees, 1100 as a strike price, and we'll keep volatility at 75. Okay, so now we'll calculate. So you see the data right now is 57 and 46, the price for call and put, right? Call put का price जो है वो 57 और 46 है, okay, at 75 IV. Let's say we have created a short wall strategy, okay, that we have discussed. Okay, so when we created a short wall strategy, that means I'm expecting the IV going to crash. Okay, fine. Okay. Sorry. I think I haven't shared my screen. Just let me share my screen. Okay. Just I'll show it again. Sorry, I forgot to share. Okay. Now see. Sorry, I'll go again on the chart. Okay. No worries. Okay. Now you can see here. So when you go to the QuantSap right application, okay. Uh, when you go to the QuantSap application, you see that this is the IV data. Okay. IV charts. Okay. So you open the IV chart. Okay. Now you see this. This is the data. Okay. Now I'll go to 500 days. Let's say. So I'll just show you a historical data. Now, can you see this? There is a this particular thing. These are the days. Okay, can you see the IV spikes? Okay, these are the days where we have the result act specifically. Okay. Okay. Now see this. This is a 24 July. Okay. What we have discussed in this previous session that before the event IV is going to rise. So here you see from 5th July the IV was 23 and in next 20 days it went up to 75. Okay, that is one thing. Now post that you see what happened. The IV crashed to 21 just next day only. Post event. Okay. Now what is the effect of this? Let's try to comprehend. Okay. So we'll go to the options calculator. Okay. We'll change it to Axis Bank. Okay. I'm just showing you how this works and it's a historical data. Okay. So IV was 75. Now if you see the data comes up to be 57 and 46. So this is the the call and put premium if IV was 75 and just 5 days before the expiry, it's a very big premium. Okay. Now let's say what we are saying, the IV is going to crash by, so we know that this is going to happen every time. Okay. So what we need to do is we will reduce it by to 21. Okay. So my premium is 57 and 46. Okay. So it will be approximately 100 rupees premium. Around 100 rupees total. Okay. If we sell both, we get 100 rupees premium. Okay. Now let's see. Tomorrow IV going to crash to 21 again. So I'll reduce it to 21 and I'll increase one more day because next day, right? Okay. So theta decay I have to get. Now see what is the premium left out. Now premium left out is only 28 rupees. So 100 rupees will collapse to 28 rupees in just one day. Okay. Now you have created a straddle of 1100. Okay. Plus break even point, that is 1200, and minus break even point is 900, 1000 rupees. So 300 points range we have. And before that, if the stock is within that 300 points range, Axis Bank, we are safe. Okay, now let's say I'll just change the price of Axis Bank also. Let's say it comes to 1200. Okay. Now what happens? Even at 1200, we are break even. If market moves to 1200, we are still break even. We are 100 exactly at 100 rupees, right? And what if the market comes to 1000 rupees? Again, will be somehow near to break even only. So within 300 point range, if the market stays anywhere between, we'll make money. Okay, let's say 1050. Okay, so my premium is 50 rupees. Again, it crashed to 50 rupees. So are you getting what is the effect of IV happening on your data? So this is a big impact. Whenever you see the IV has going up very drastically and you go and create a short position in that, you get this particular thing. You get this result. Make sense, everyone? So this is the effect of this thing. So eventually you have to go and check the IV chart. Okay, fine. You have to check the IV charts. Okay, and you can just see how this thing has been worked out historically. Okay, now you see when before just any event, right? You see the IV is going drastically up. So these are the result dates. Okay, you see here again, right? Again here. Fine. So this is how it works. Okay, whenever there is an event, okay, so it always peaked on the result dates. Okay, IV crash karta hi karta hai eventually every in every particular stock. देखो ये भी आईवी है, देखो इसका 73 तक चला गया था. There are few instances जहां पे पहली आईवी क्रैश हो जाता है. There are very few instances, but लेकिन most of the time it is always peaked. Any stock you check, right? And if you see that multiple times it is happening that this in this stock IV is crashing first, so don't take it, don't take a trade, right? There are multiple stocks which give you better trades. You see the Bajaj Finance, you see these are the all dates where you see the IV is crashing very drastically. Okay, and before the result it peaked always. So this is the one thing that you need to do always. Okay, so I'll just create I'll create a hypothetical example to just give you an understanding of it. Okay. So let me just come and we'll do the adjustment also. Okay, now let's say I'll take an example of stock XYZ. Okay, now this stock is trading at, let's say, 1,000 rupees. Okay, stock is spot price. Okay, strike, I'll go with 1,000 rupees only. Okay, and CE trading at, let's say, CE trading at so I will consider the IV also in this. Okay, so we'll considering, let's say, 52 rupees. Okay, and PE trading at, let's say, 56 rupees. Okay, put always have a high IV then call. So the premium for put is always high than call. Okay, fine. So this is one understanding that we need to know. Okay, spot and strike. Now what we need to do is we need to create an IV. Okay, so let's say IV was, we consider it, let's say, 65. Okay, so this is the just event day. Okay, so we're talking about event day. So earlier IV was, let's say, 21 or 20, 25. Okay, IV right now. Okay, and Vega. Okay, we need Vega also, right? So Vega, let's say 2 rupees. Let's say 1.5. Okay, Vega is 1.5. Okay, now what happens now? Days to expiry is, let's say, 10 days. Okay, now 10 days we have. Now what is the effect? Now we need to know what will be the effect. Now IV crash, next day post event, IV crash to let's say, I'll just take a hypothetical number. Okay, so let's say 40. Okay, IV just came down by 15 rupees, 15 points, sorry. Okay, now what will be my new premium? So how do we get to know what is Vega? So Vega is 1.5. Okay, so IV crashed by 15 points. Okay, so this multiply by 50. So 22 rupees it will crash, right? So my new CE and new premium would be new premium. Okay, so just give me a second. New premium would be 52 minus 22 rupees. Okay, so this will be 29 and 56 minus 22.5. Okay, so this will be 33. So eventually your this plus this, okay, it will reduce to 63. Okay, this plus this will reduce to 63. तो आपने जो 100 rupees का 108 रुपए का प्रीमियम बेचा था, this will reduce to 63 in one day. Okay, so this is what it means whenever see the IV is going to go down. Okay, this is the effect. Fine. Now you are in profit. The question is, now you are in profit. Okay, now you can go and buy the rings. Okay, so इसके ऊपर आप क्या कर सकते हो, 1,000 rupees का या 1100 या 900 का, you can go and buy the premiums. So उससे क्या होगा, आपका strategy safe हो जाएगा. Okay, now let me try to replicate this thing in some of the stock or somewhere. Let me just go and create a straddle. Okay, okay, so let's say this is the current price 69. I created it on 80 rupees, let's say 90 rupees. Okay, and I created it is 90 rupees. Okay, entry price is 90, and let's say I created this on 120. Okay, fine. Now what I'll do is I'll just go and buy the premiums in this. Okay, so this is my current state. So I have sold a call option, so I'll buy, let's say this one. I'll buy this one. Okay, and I'll buy two side, so I'll buy this one. Okay. Okay. Now you see what you have seen here is key. Even if the on wings also, I am not in loss. Even if market, so once I've done an adjustment, let's say my straddle gave me a profit, and post that I bought a wings, right? So I'm still in profit. You can see that. Okay. So even if the market goes anywhere now, I'm in profit, totally profit. I will not lose anything. Even on the wings, market goes up, market goes down. You will make profit. So you can see the probability of profit reach to 100 here. So this will only work when you have already earned some profit. So butterflies have one adjustment that, once you are in profit or your straddle has in profit, you can just, what you do is you can just do adjustment by buying the options. Okay. Now we have a still potential to earn more profit in this. Okay. So if the market closes somewhere here only exactly, this strategy is going to give me approximately 9,000 rupees profit. So by investing 90,000 rupees, if I'm able to earn 9,000 rupees, let's say even 8%, 8,000 rupees, so I'll still be making a 8 to 9% return on every particular stock on a event sessions. Even let's say drop it to 50%, 5% only. You will be able to earn 5% only. Let's say reduce your strike rate to even 50%. Still, you will be able to make money. Now that's the power of derivatives. When you understand the concept and you make it in that way. Fine. Now, one more thing that I want to add. So this is the post adjustment. Okay, let me just remove it and I'll just bring it to the same price. Okay, let me just. Okay, so this is the current situation. Let's say I've created. Okay. Now the question comes. Now I'll go to butterfly. Okay. Now in that case, I have to change the prices now. Okay. So I did it with 90 and 120. Okay. These are the my entry points. Okay. This was again. This will be some price higher. Okay. We'll go with 30 rupees. No, 30, 25. Okay. And might be 20. Okay. This is the current scenario. इसको थोड़ा बढ़ा देते हैं. Let's say 130 and 100 rupees. Okay. Now this is what I've created out of it. Fine. Now what I need to do is now let's say this is a situation that I'm already in profit. Okay, I've sold it at 100 rupees. Now the premium is 66 rupees and 130 is on 95. So and somehow I'm 30 rupees profit in this. Okay. Now what I can do is in addition to this is a very important step that I need to do. Okay, don't do anything. Don't do any adjustment. What you need to do is just go and buy one strike above put, one strike above call and one strike below put on this. Okay. So I'll just buy this put option and I just buy this call option. Okay. Fine. Now see. Now post result, even if the market moves either ways very drastically, let's say 5%, 10%, you're still going to make money out of it. And this whole strategy is not even in loss anywhere. So even if the market shows, like you have seen yesterday, Eternal, the stock, it went up by 7% and today is 10% up. So in just 2 days, it went up by 17%. And what if you have created a short straddle strategy? You were in loss totally, right? Okay. But taking an effect of IV, simultaneously taking an effect of your mind that you can make money out of it. So now see this graph. This graph is totally gone into a situation where we don't have any loss. So this is the adjustment that you need to do in butterfly. So you have to wait. Let's say IV has crashed and you still feel that market might not go anywhere, or even if this goes, it goes drastically to anywhere. So once it has been done, you just need to go and buy one strike above the current price and one strike below the current price. Okay. you eventually will turn it into a no loss strategy and even a directional strategy. Even if the market moves anywhere, you will make money out. Make sense to this thing? Please do let me know. Any doubt? Right? Okay. Now, what comes? What if now the third adjustment is that there is a situation where when next day when market opens, it can opens on wings. Okay, you don't have to do anything. Let's say, let me just go to straddle and I'll just create a short straddle. Okay. Now, what if market opens by 10% down or 10% down? So in this case, I'll be in a loss. Now my loss is eventually very limited to some amount. Okay. So if I don't want to do any adjustment, what we need to do is we just need to ignore that part. Okay, you can just book a loss in that because the strike rate is eventually very good in this particular strategy. Okay, so even if you make loss in one or two, okay, you will not be hurt. So what you need to do is you just need to go and check the result impact before and after. Okay, so what you need to do is just go to the result analysis, okay, of any particular stock, okay, and just see how the stock has behaved just 1 day or 2 days before the result, okay, eventually after, okay. So if I just go and check historically, you just go for Axis Bank, okay. Now if you see, these are the few results. I'll go, let's say, we'll check from January 2020, okay. Now these are the results that we have got, okay. Now post 1 day after the result, okay, we are just checking 1 day. Now see, is there any major drawdown that we have seen? So if you see, the maximum drawdown that we have is 6%, okay, and 6% on the higher side. We have 8% on the higher side also. So eventually, the stock moves on an average of 2 to 3%. Okay, there are very few instances जहाँ पे it moves by more than 5%. Okay, तो on an average इसका इतना ही आएगा, right? So even if the stock moves, so 50% strike you will have eventually. Okay, so this is how you need to understand. And the stock has high volatility post result, then don't trade it, right? So this is how you need to get the interpretation of it. That okay, by trading the results you can get to this thing. Okay, I hope this makes sense to everyone. So just telling you what we have done. So सबसे पहले what we need to do is just need to understand that IVs are going to crash post results. Okay, and before 10 or 5 or 10 days before, the IV started rising up. Okay, on a result day it peaked. So on a peak day we have to just create a straddle, or probably mostly I will create a butterfly. I will suggest a butterfly because of the limited risk it has. Okay, so once it crash, okay, fine, you can just book the profit. Either you do small adjustments of buying the options, or eventually when you have already in a butterfly, just go and buy the one strike above and one strike below the options, and eventually it will make you out of the situation that the strategy goes in loss. Okay, so these are the three adjustments that you can do. There are one adjustment of even when market open up, gap up or gap down, but that you require huge margin also. So we don't have to do it. Just book a loss and then create another strategy on another one. That's the simplest thing that you can do. Okay, fine. Okay, so any doubt in this? So these are the few adjustments that you guys need to do according to the this thing. There are if you want to check how the payoff has been behaved, so you can just do it from here also. Okay. Yes. Any questions you guys have out of this? Okay, so with this we have finished our IV chapter. Okay, in masterclass, so we have done the basics of the IV. We have done the the strategies part of this, and today we have completed the adjustment part of the IVs. Okay, so this is the event trading part that we have completed. Okay, from the next probably in the next session of Thursday, probably we'll start another session on masterclass, probably a class of 1 or 2 sessions. Okay, I have to check which one is this. Okay, but do attend that session also for your learning part. Okay, And whatever we have discussed today, it's only for the learning purpose. Okay, it's not kind of any kind of recommendation and all those things. Okay, so just do the thorough due diligence before taking any trade. Okay, and do back testing as much as you can, and make yourself comfortable before taking any trade. Okay, just do the research, make sure the data speaks better than before you take a trade. Okay, so that's one another part. Okay, so thank you so much, guys. I'll see you again in the next session. Hope you have a good day. Okay, bye.